So Saturday's strikes didn't just break the peace. I mean, they completely broke the market's psychological safety net. We all knew the tension with Iran was there, right? But Saturday changed the math completely. We've gone from Cold War to hot war, and your portfolio probably took a hit before you even woke up. Welcome to everything you need to know about finance. Today, we're unpacking the money behind the missiles.
Yeah, and real quick before we get into the charts, remember, this is just an educational deep dive. It's not financial advice, so please do your own due diligence.
Right, exactly. And hey, if you find this kind of content interesting, please like and subscribe. It really helps. So let's get into it. The fear gauge is spiking, but looking at the data, the market isn't reacting the way the textbooks say it should.
Right, it's definitely a new paradigm. To understand this shock, you have to look at the timeline. So from 2020 through 2025, we were in this phase of shadow warfare. I mean, even last year's Operation Midnight Hammer was, well, it was surgical. Very quiet, very specific.
It wasn't a front page explosion.
Exactly. But Saturday was loud. It was a clear transition to major combat operations. The market hates uncertainty, sure, but it hates kinetic conflict in the Middle East even more.
And we saw that panic instantly. The Dow dropped over 500 points right out of the gate, and the VIX hit 22. We haven't seen fear levels like that since Ukraine in 2022. Usually when the world catches fire, everyone runs to the same safe rooms, gold bonds, maybe cash.
Yeah, and gold is doing exactly what it's supposed to do. It's up nearly 11% in February alone, hitting roughly $5,296 an ounce. Silver is nearing $93. Investors are terrified, so they're buying hard assets. But here's the fascinating part, and this might upset some people. The digital gold thesis just took a massive beating.
Wait, pause there. The whole pitch for Bitcoin for the last 5 years was that it's a hedge against exactly this kind of geopolitical chaos. Are you saying that thesis is dead?
For this specific crisis, it looks like it. While gold skyrocketed, Bitcoin dropped below $64,000. It's moving in lockstep with the NASDAQ. It exposes the truth that when the missiles fly, institutions treat Bitcoin like a risky tech stock, not a safety net. They panic sold crypto to buy actual gold.
So if tech and crypto are bleeding, where is the smart money actually hiding? Because it's not just gold, it's the companies making the hardware. We're seeing defense stocks like Kratos Defense, Rocket Lab, Lockheed Martin, all rallying.
Well, this isn't just general war profiteering. It connects to the intelligentization of warfare.
Okay, that sounds like a buzzword. What does it actually mean for the stock price?
It comes down to inventory burn and massive government backlogs. Modern warfare isn't just about boots on the ground anymore. It burns through high-tech, expendable drones and space assets way faster than we can build them. Kratos and Rocket Lab are up because governments have to restock the shelves immediately.
But we have to talk about the logistics too, because that's where this hits the average consumer. I'm looking at the Strait of Hormuz.
The ultimate choke point. About 20% of the world's oil flows right through there. With Iran threatening the strait, the war premium is back in full force. Brent crude is surging past $72 right now, and if that strait closes, we're looking at triple digits easily.
And the U.S. just established a maritime warning zone in the Persian Gulf, which means insurance rates for shipping are going to skyrocket.
Precisely. Ships reroute trips, get longer, everything gets more expensive. And this brings us to the biggest macro risk, which is stagflation.
The word nobody wants to hear. Walk us through why this is different from normal inflation.
Because it completely traps central banks. Everyone was betting on interest rate cuts in 2026 to help the economy. But if this conflict spikes energy costs, inflation goes up, they can't cut rates if inflation is rising, even if the broader economy is slowing down because of the war. They are stuck between a rock and a hard place.
So we might be looking at higher rates for longer and high prices. Fantastic.
Unfortunately, yes. Volatility is likely going to stick around through Q2 of 2026. The market is essentially holding its breath right now to see if the Strait of Hormuz is actually blocked.
It's an incredibly messy situation.
It is, and I'll leave you with one more provocative thought. We are in the middle of a massive AI boom, right? We're building data centers that require incredible amounts of electricity. This is the AI energy nexus. Can the global economy actually support the massive energy needs of this current AI revolution if the Middle East energy supply is cut off?
Wow, that is a collision I don't think anyone has fully priced in yet. We'll definitely be tracking it. Go try out our latest episodes for more updates on this. Thanks for listening.